The question presented before the body today is whether New Jersey, instead of making efforts to cut our obscene and confiscatory local and state taxes, should attempt a patent subterfuge, attempting to turn taxes into charitable contributions. Now, Madam Speaker, given the benefit to some of the wealthier residents of our state, or those unfortunate to live in more profligate municipalities and counties, should the federal government allow something like this, I think we should embrace it. While we should welcome such a deduction if it were given, I am highly skeptical that it can be taken. I fear that in adopting such a proposal, in the absence of a definitive ruling by the Internal Revenue Service, that such will actually affect its asserted ends. We may lead a taxpayer, or many a taxpayer, into an unfortunate position, owing back taxes, interest, and penalties for what amounts to a legislatively abetted tax fraud. Indeed, I believe that this proposal represents little more than virtue signaling, providing the majority with an opportunity to pretend that they actually stand with the taxpayers, while simultaneously adopting numerously spectacularly expensive proposals which conclusively prove that they do not, and grandstanding. Presumably, the IRS will issue an opinion on the subject before the tax filings of 2019 are due. Instead of wasting our time today, we could simply abide that event. Madam Speaker, until the adoption of the recent federal tax cuts, which will slash New Jersey taxes, or taxes of New Jersey residents, 80% of New Jersey residents, and hold another 10% of such residents harmless, the federal government treated contributions to charities and state and local taxes the same way. Now, federal tax policy draws a distinction, continuing to provide an unlimited deduction for charitable contributions, while limiting deductions for state and local taxes to $10,000. For the overwhelming majority of New Jersey residents, this is a distinction which will not matter. As the new standard deduction rate of $24,000 for a married couple, very few people will bother to itemize. For those few, mostly wealthy folks, who do, the majority's proposal to blur the distinction between a voluntary contribution and a compulsory tax is offered. To reiterate, Madam Speaker, as a New Jersey resident, I sincerely hope that this far-fetched Rube Goldberg scheme actually works, as I would dearly love to see the tax liability for all New Jersey residents reduced, even for the wealthy who would benefit the most from this particular proposal. But for the following reasons, I am skeptical that it will. Under federal law, gifts to charity remain fully deductible. For such purposes, a gift to a governmental entity qualifies, under certain circumstances, as a charitable contribution. Among the requirements of a charitable contribution is that the gift requirement of a donative intent, which has long been defined by federal law as a contribution made without any expectation of personal benefit in return. Taxes, Madam Speaker, on the other hand, are by definition anything but voluntary. Government exacts them under threats of grievous penalties, if not violence, for the failure to pay. One might expect the distinction would be generally easy to draw. But as my colleague has noted, in repeated incidents, in an effort to reward public-spirited behavior and to encourage it, states have adopted programs which offer tax deductions or credits for behaviors that the states wish to encourage. These cases include donations of property, easements, tax credits for donations to private schools, and the like. In the case of credits, this can sometimes produce the complete satisfaction of a taxpayer's state or local tax liability, while also entitling her to a federal charitable tax deduction. Almost uniformly, the courts and the IRS have ruled that such credits are not income to the taxpayer and that the federal deduction is entirely proper. This apparently forms the basis for the instant proposal. The majority proposes that municipalities create charities to which a taxpayer might voluntarily contribute, receiving a credit in return against property taxes. In my view, though, Madam Speaker, this is a patent fraud. The contributions would not, in any meaningful sense, be voluntary or charitable. While a taxpayer would be free to make them, the failure to do so would produce a tax liability to fund precisely the same enterprise. In short, there is no element of voluntariness and no distinction between what the government entity does with the contributions and what it does with taxes. In every single case I reviewed, dealing with conservation easements, private school vouchers, and other such programs, the donation was not something the individual taxpayer was otherwise obligated to do. That is, In order to encourage donation of conservation easements, which presumably could only be obtained through purchase or eminent domain, the state provided a credit against its own taxes. Here, the money collected voluntarily would otherwise be exacted through taxation. The government gets no benefit it would not have received absent the charitable contribution. The source of the funds is the same. The use of the funds is the same. The money is in no sense a gift, as the government will take it if it is not surrendered voluntarily, and use it for precisely the same purposes as it does tax revenue. Madam Speaker, in Arizona Christian School Tuition Organization versus Wynne, the Supreme Court of the United States wrote about such contributions as follows. Like contributions that lead to charitable tax deductions, contributions yielding tax credits are not owed to the state, and in fact pass directly from taxpayers to private organizations. The contrary position, that a tax credit donation constitutes a satisfaction of a tax liability, assumes that the income would be treated as if it were government property, even if it has not come into the tax collector's hands. That, Madam Speaker, is pretty much what is applicable here, in the fact that the money, if not contributed voluntarily, would be owed to the government, and hence they are not voluntary for the purposes of charitable contributions. So, Madam Speaker, a donation to a private school resulting in a tax credit at the state level is charity, and would entitle one to a federal tax deduction, even if the state provided the donor with a state credit as well. A contribution to a public school, which does nothing more than offset an otherwise applicable school tax, is not voluntary. To be charitable in that case, it would have to exceed the amount of the otherwise applicable property tax liability. In conclusion, and I know you were wondering when I was going to get there, Madam Speaker, I believe that the IRS will rule that when a contribution goes to precisely the same governmental purposes as would an already extant tax liability, and absent the contribution, the same amount would be exacted through an involuntary tax, the transaction will not be considered charitable. If this prediction proves to be wrong, a fairly substantial number of mostly fairly wealthy New Jersey residents will be extremely happy, and this proposal will have been well worth the time to pass it. If, on the other hand, this prediction proves out, the time spent on this proposal will have been utterly wasted. Given that there appears to be no reason to rush, I question the timing of this action. And to repeat, the clear problem faced by the people of New Jersey, whether on their income taxes or their property taxes, is not the inability to deduct those from their state or from their federal taxes, but the fact that they're obscene and too high to begin with.